better deal in buying US dollars in exchange of the ringgit. No, it was not the money changer. But yes, it was a fintech company. Now, fintech companies are generally startups that use technology to make financial institutions more efficient. But there are concerns over data privacy, security, as well as money laundering. But on the other hand, banks do point out that this advancement of technology could disrupt its banking services. In Malaysia, the fintech industry is still in the infancy stage, although globally the country is considered ready in terms of infrastructure and regulation. So is there enough support for the fintech industry within the country? I spoke to some stakeholders about this.
Well, I personally feel that regulators can do more, especially we observe that technology is always advanced a lot more faster than regulations, so therefore they're always playing a catching up game.
But we don't see that from banks at the moment. At the moment, it's mainly just talking. We don't see them actually allowing startups to actually get either licensing or safe harbors to operate in Malaysia as compared to what the SC has done.
One thing I do agree, fintech companies, they probably they are not as aware of financial regulations as the banks, like institutions, because they're fairly new in the market. But that also allows them to innovate.
I think we're going to look at the scene in Southeast Asia. So I think it's quite clear that in Singapore, the MAS has taken quite a leading role when it comes to not regulating too heavily startups.
In Malaysia, transaction values for the industry is still low, but it is expected to pick up quickly. However, in developed markets, fintech is fast being accepted for various financial transactions. A significant number of fintech companies, especially those in the payment system space, actually work alongside with local banks. Still, fintech is not to be taken lightly. Top bankers themselves are speaking of its imminent threat to their business.
Because the fintechs need advice from banks in terms of how to develop their solutions. And of course, we can benefit from understanding what's the latest innovation in technology.
Well, for MoneyMax, our initial goal is not so much to disrupt banks, but to disrupt financial services. So that can mean banks, that can mean remittance companies, that can mean money changers. It doesn't matter to us, we're quite agnostic to it.
There will be some disruptive technologies out there that will challenge the bank, but I think that's a good thing for the consumer at the end of the day.
I wish to see, again, end of the day, I keep stressing out proactive engagement, proactive conversations with not only the financial institutions that's currently regulated by the policymakers, but please do reach out to the fintech players in the market, because they are the ones currently innovating in the space. At the same time, they are disrupting all the financial institutions.
It's not only the government, but also the whole ecosystem. So again, we are working to create that ecosystem as a bank. So our role is to work with some of these fintechs to help them develop their solutions, to mentor them, and to figure out some problems, because some of it, are some things we have to jointly figure out. Things like security, customer data, confidentiality. Those are challenges that we need to overcome.
To be truly disruptive and truly make an impact in banking transaction costs or whatnot, you need to be very, very supportive about it. So we've seen that in Singapore, and I think the signs are very positive for Malaysia, but it'll probably take a few years to catch up in that sense.
One of the dreams that I have was, I hope one day, even the makcik selling nasi lemak at the roadside, she can actually accept some sort of electronic payments for her business.
Even the central bank has started to echo these views. Bank Negara Governor Dato Muhammad Ibrahim gave a grim reminder to banks of the threats that are posed by fintechs. He said 10 to 40% of banking revenue is possibly at risk by 2025 due to innovations outside banking institutions. Zunaira Saieed, Star TV.